Check out shares of EV maker Lucid getting hit this morning and adding to some losses on the year after missing revenue estimates, reporting a larger than expected loss per share. Joining us this morning is Lucid's interim CEO, Marc Winterhoff, along with our own Phil LeBeau. Morning, Phil.
Good morning, Carl. Marc, thank you for joining us today. Carl set us up with your results coming out of Q2 and your guidance that you're going to be trimming full year production. What's the biggest issue you're facing right now?
Well, maybe let me start with some positive points of Q2, because despite of all the challenges, we still managed to have the sixth consecutive record quarter when it comes to deliveries, and we also had record production in Q2. We certainly had our challenges, and I think the biggest one here is trade policy and tariffs, which had impact on our cost base. We had an extra hit on our gross margin that we didn't expect to be that large in Q2, but it will actually even itself out to what we guided before in the remainder of the year. And the other big topics that hit everybody and us, thankfully, actually not, was the topic about magnets, availability of magnets. We were able to overcome that issue, and it did not hit our production in Q2, in contrast to many others. And we solved the problem also for the remainder of the year. But the whole topic about changes in tariffs, in trade policy, and then also when it comes to tax credits is something that keeps us up at night.
Marc, are you getting the raw materials that you need out of China? Because so much of the EV supply chain is routed through China. And yes, you're making adjustments, but is that still the main choke point?
Well, that's what I just mentioned. That was a big topic in Q2. And if it wouldn't be for our engineers and our team reacting very nimble and fast, we would have stopped production in Q2 at some point. But it didn't happen because we were able to overcome it. And we have also now, particularly when it comes to the raw materials and the magnets, we have now all the licenses that we need secured for the remainder of the year. We have also a number of new initiatives that we have, changing the chemistry of the magnets, which kind of rare earth we are using, or even going away from rare earth. Plus, last but not least, sourcing from other markets. So I think we are actually in a good place right now.
Marc, you guys announced last month that, or just a few weeks ago, that you're going to be partnering with Uber and the autonomous vehicle technology firm Nuro to develop autonomous vehicles. From your perspective, can you roll out those first ones as you have indicated, but by the end of late 26 next year?
Yeah, I mean, we are in the process right now and working with the Nuro team in particular on the development. And, everything that we see right now is that we are making great progress. And we actually hear from them that they were totally astonished how fast we were able to integrate that into our vehicle, which is due to the fact that our Gravity is already very well equipped to, be a platform for autonomous driving. So we're very confident of that we are able to do that. And, then starting end of next year with rolling those out in the U.S. and then also globally.
Sir, it's David Faber back in our studio. I'm curious, with adjusted EBITDA negative $632 million, I know you have, $3.6 billion in cash, is at least what you said on the call, total liquidity of about $4.8 billion. But how much do you have enough? Do you have enough capital to get you where you need to be, or are you going to need to raise more, and perhaps from your largest shareholder, the Public Investment Fund of Saudi Arabia?
Well, as you said, we currently have $4.86 billion in liquidity, and that will take us. It hasn't actually changed into the second half of next year, and we will, we will raise capital if it is appropriate for us. We are opportunistic when it makes sense, and we will do that when it's needed.
Well, when's it going to be needed? Do you have any sense?
Well, that's something that again, we're doing this right now. We are funded until the second half of next year, and then when we see it appropriate, then we'll make actions on getting additional funding if needed.
Marc, it's Phil again. I don't mean to beat a dead horse here, but because the supply chain is so important and the trade negotiations with China, they show no sign of being resolved anytime soon. Where are you now sourcing that you were previously sourcing from China? Or is it simply that you're still sourcing China, but you simply have the licenses through the end of the year.
The licenses are mainly because for the rare earths, not for other things. I mean, the whole industry has a very global supply chain, and we have the same. We still have percentage of our parts that we need for gravity and for air from China, but it's actually a small percentage. So we think that we are in a good place. We also have, right now we're building all of our vehicles in the United States. So we are making changes right now in order to be more resilient to these discussions. You may have seen that a couple of weeks ago, I attended also the launch of the new Panasonic battery cell plant in Kansas. So the vast majority of our battery cells will come from the U.S. for our U.S. production soon. We have also struck a lot of deals with graphite suppliers because just producing cells, for instance, which is the biggest individual BOM cost element of an electrical vehicle, wouldn't really help you if you still would have to import the raw materials. So we are doing that as well in order to be more resilient.
Marc Winterhoff, the interim CEO of Lucid. Marc, thank you very much for joining us today. Guys, I'll send it back to you.